Veterans, this is for you. If you've been waiting on the market to get just a little bit better, you wanted interest rates to improve, or you know somebody who's a veteran who has been, kind of in the sidelines, because interest rates are too high and making things more challenging to buy and less affordable, I want you to pay attention to where rates are right now because they've come down a significant amount. And I think they're at a level where they're starting to unlock opportunity. And I think a lot of veterans are just kind of caught sleeping. They just don't know. So I wanted to share my screen with you and show you what I was pricing out for a client earlier today because I thought it was really insightful, it was really relevant, and it actually brings a lot of affordability back into the marketplace, especially when we pair it with a good loan program like the VA loan. So if we take a look at this, this is a 6-month average of the VA loan. This doesn't take into account all the variability, the adjustments that are made with FICO score and things like that. We're just going to use a general average. And so if we go back to May, we were in the upper sixes, kind of floating around with those mid to low sixes for a little while. Then we started to see things get better. Toward the end of July, early August, we're getting into those upper fives, but look at where they are today. Today, the average is 5.682. So some veterans are going to get things even a little lower than that. There's buy down opportunities I've seen as low as 5.25. And then some are going to be just slightly higher depending on where you are with your credit score and a few other factors. But the bottom line is they're in the fives. So they're looking really good. Now, if we pair it with the right strategy, I think you can win. Remember, with the VA loan, no down payment, no monthly mortgage insurance. You're ahead of the game there. Depending on if you have a service-connected disability or not, you may or may not have a VA funding fee. We can talk about that with your unique scenario, but it's a really solid loan program. You can use it more than once. A lot of people don't realize you can use it over and over again. We're in LA County where we have some really generous loan limits. And so what happens is you have this like really nice bonus entitlement. So I've helped clients sometimes pick up 2 or 3 loans with 0 down because they have so much room with their bonus entitlement. So if you're a veteran, let's take a peek at that. But I want to show you an example here real quick. This is a property here in Palmdale. It's a 580 purchase price. Nice house, 4-bedroom, 3-bath, 2,759 square foot. So I was pricing this for a client. And initially we were looking at a mortgage that looked a little something like this. So 30-year sample. This was with 0 down. They were still going to be up in the $4,000 range. Now, that payment breakdown, to give you an idea, was principal and interest here, ballpark on property taxes, ballpark on insurance. But again, no monthly mortgage insurance, 4,200 or 4,223 in this scenario. But this particular client was looking to take advantage of the market. It may or may not work on that property that I just showed you, but depending on where the sellers are at, they may offer some concession. If we can get the right concession, we can pair it with a buy down strategy. You can use this on a VA loan amongst other loans. But this is really cool. Look, we can actually get, if we write our offer right, we can get the seller to write a concession that can get our interest rate down to 2.75 for the first year. We can get down to 3.75 for year number 2, 4.75 for year number 3, and then finally year number 4 is the first time you'd realize the final rate at 5.75, and that would be over the remainder of that loan. Now, in the first 3 years, if interest rates get better than say that 5.75, and you'd prefer to refinance, let's say you can get something into the 4s or even the really low 5s with no cost, do an interest rate reduction loan, an EARL on the VA loan, then we can simply rewrite that. And any of that money that we use that was concession to keep your payment and your interest rate lower for the first 3 years, any of that money that was not used, it's going to get given back to you against your principal. So you're not going to lose it. You actually keep it. It's going to knock down the balance of your new loan. So when you go to refinance, your balance is a little bit cheaper. And then you compare that with the right interest rate for, again, another long-term 30-year fixed. These are all based off 30-year loans anyways. So if the market went the other way and for some reason rates got higher from here, at least the first 3 years are going to be subsidized by a good strategy with the seller, giving you a nice long runway to ease into your monthly mortgage payment. And then in the long run, it wouldn't be any higher than that 5.75. It's going to lock that in permanently at some point down the road. So take a look at the savings here. First year, $1,016. Second year, $698 per month. Third year, $359 per month. These strategies work really well for just about everybody, but especially those who have maybe auto payments that are just about to be paid off. Maybe they have a year and a half left to get paid off. Once they're paid off, you can afford a little higher payment on your mortgage. This works well for that. Also, if you're expecting a raise and you want to kind of put off buying for another year until you get that raise, well, there you go. This will actually help you reduce your expenses right now, get in the door, and then manage it. And remember, we're doing this in a time right now when I think the demand is just a little softer. So we can take advantage of the opportunity to ask for concessions, get them from the seller, apply them properly so that we have just a really amazing structure with our loan. And when rates do finally come down, it's going to unlock a lot more buyer activity, which will again push prices unless we have some crazy surge, which I don't know where it would come from, but we'd have to have some crazy surge in inventory. So you can get in, keep your payment a little bit cheaper, give yourself a nice long runway. I think 3-2-1 buy downs work well. You can also do it with a 2-1. So if we can't get enough seller concession to cover like a 3-year buy down, we can do 2-year. We can even do a 1-year if we needed to. So a lot of different strategies that we can deploy here to kind of help you out. But I wanted to point out interest rates upper fives right now on VA, and then paired with a strategic buy down, we can be back in those 2 and 3% range for quite a while. This is actually a really good way to make yourself a homeowner. All right, guys, hopefully you find that helpful. I will talk to you very soon. Let me know if you have any questions.